If you've been following XRP even casually, you might want to sit tight for this one, because what I'm about to share with you could be the exact setup we've been waiting for. A chain of events, both in the financial world and in global markets, has created a scenario that I believe puts XRP on the verge of something explosive, faster and more powerful than most are even prepared for. And when I say close, I don't mean months away. I'm talking potentially days away from the type of move that could reshape how investors see this asset. When you look at the crypto market today, XRP is sitting a little lower, maybe down 1 or 2%. Nothing dramatic, but behind that small dip, a lot has actually happened that most people aren't connecting the dots on. And those dots, once connected, paint a picture of a perfect storm brewing for XRP. Hey guys! Welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP future. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember this is not a financial advice video. First, let's talk about jobs data. The U.S. government just revised payroll numbers downward by a jaw-dropping 911,000 jobs. Yes, you heard that right. This is the largest cut in history. Now, on the surface, that sounds like bad news. Fewer jobs, weaker labor market, definitely not something the average person wants to see. But here's the thing. In the twisted way that markets operate, weakness here actually creates strength for assets like XRP. Why? Because a weaker labor market puts enormous pressure on the Federal Reserve to cut interest rates, and cut them aggressively. We're not talking about vague promises months down the line. The Fed's meeting is literally around the corner, just 1 week away. And with this kind of jobs data, rate cuts become not only likely, but practically unavoidable. And if you've been around this space long enough, you already know what happens when the Fed loosens monetary policy. Liquidity flows back into the market, risk assets get bid up, and historically crypto, and XRP in particular, responds in a big way. But that's not the only piece of this puzzle. Global tensions also came into play, with Israel striking Hamas, which spooked markets temporarily. But here's the key. I see this as a classic V-shaped recovery scenario. A quick dip, followed by a sharp bounce. These kinds of jolts shake weak hands out of the market. But for long-term holders of XRP, it's nothing more than noise, because the fundamentals lining up behind the scenes are far bigger than a one-day headline. Speaking of fundamentals, let's talk about Ripple's latest move, because this is where things get very exciting. Ripple announced that BBVA, the largest bank in Mexico and one of the biggest multinational financial institutions in the world, is deepening its partnership with Ripple. Specifically, they are now working together on custody solutions. Let me put this into perspective. BBVA operates in 25 countries, serves more than 80 million customers, and has a market capitalization north of $60 billion. This is not some small regional bank experimenting with blockchain. This is a financial giant integrating Ripple into its infrastructure. Think about what that means. We now have Ripple actively working with institutions that control the flow of billions, even trillions, across borders. This is what mass adoption looks like. Real banks, real customers, real utility. And BBVA isn't the only heavyweight in the mix. Standard Chartered, another Ripple partner, recently stated they expect the Fed not just to cut rates by 25 basis points, but by 50 basis points. That's double what the market was pricing in just days ago. And guess who echoed that call just minutes later? BlackRock, the biggest asset manager in the world. When institutions like Standard Chartered and BlackRock align on something, you better believe the smart money is listening. And what they're signaling is clear. Liquidity is about to flood back into the market. Trillions of dollars sitting on the sidelines are waiting for the green light. Rate cuts are that green light. And XRP, being one of the most institutionally favored cryptocurrencies, is positioned to benefit massively. Now, some people might shrug and say, okay, A 25-point cut or even a 50-point cut, what's the big deal? But it's not about the number itself. It's about the narrative, the shift in perception. Markets run on psychology. The moment Wall Street smells easy money again, risk appetite flips back on. Hedge funds, asset managers, and even pension funds start looking for asymmetric bets. And XRP undervalued and trading below $3 becomes a no-brainer play. Add to this the fact that regulatory clarity is inching closer. The U.S. committee just called on the Senate to pass the Crypto Clarity Act, a bill aimed at finally giving structure to how digital assets are treated. Meanwhile, Nasdaq has filed with the SEC to begin allowing tokenized stock listings on blockchain. Tokenization of real-world assets is no longer a theory. It's happening. And Ripple, with its focus on cross-border settlements and institutional-grade partnerships, is right at the center of it. And let's not forget the political side. The Supreme Court recently ruled that a sitting president has the authority to fire the FDIC commissioner. That might sound unrelated at first, but what it really means is this. Financial regulatory structures are shifting. Power dynamics are being rearranged. And as that happens, opportunities open up for innovation. Opportunities Ripple is uniquely prepared to seize. So where does this leave us? We've got weakening labor data pushing the Fed toward aggressive rate cuts. We've got Ripple's partnerships expanding with giants like BBVA and Standard Chartered. We've got institutional voices like BlackRock calling for deeper cuts. We've got regulatory clarity bills being introduced. We've got tokenization moving forward. And all of this is converging into what I can only describe as a perfect storm for XRP. Right now, XRP is still trading under $3. To me, that's a gift. Years from now, when people look back, they're going to realize this was one of those rare windows of opportunity. The calm before the storm. I'm not here to give financial advice, but I am here to share my conviction. I believe XRP is undervalued, underappreciated, and underowned at these levels. When the dominoes fall, and I believe they're about to, this price point will look like a dream entry. So as I wrap this up, let me leave you with this thought. Every so often, markets present moments that define entire investment cycles. The people who recognize those moments early are the ones who benefit the most. In my eyes, XRP is staring at one of those moments right now. The pressure is building, the conditions are aligning, and the spark that sets it all off could be just days away. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. Thank you.